Hello, Violin Society of America. We're excited to be here. I am Alan Friedman. You are?
Daniel Jobe.
We are from the CPA firm of Freidman, Kannenberg and Co. We're located in the northeast part of the United States. And we've had the honor of being asked to present to you some financial information that's applicable to your organization, your segment of music retailing, if you will. And we're pretty excited to do this today. We're in the midst of a pandemic.
Yeah, have you ever done a virtual presentation before?
I have not. We've done some live stuff. We've
yeah, we really wish we could be with you all because the interaction when you're live is just so much better, as you guys know.
Yes.
But, you know, when we got the call and asked to present something, we didn't hesitate at all. We wanted to be a part. So
Right.
We're glad to be here with you today.
It's awesome. We like to tell jokes and funny stories, but I don't think we're going to get a great reaction from you because we can't hear you.
We'll add the crowd sounds later.
Exactly. Anyways, we're pretty excited to do this. You know, I mentioned that we are all operating worldwide in a pandemic which has brought a lot of challenges, not only to our country, but also throughout the world. And, you know, there's been some economic fallout because of it. Certainly there's the health crisis. And so now more than ever, the financial lessons that you can learn as an owner of any business are becoming critically important. They were always important because of just the challenges of retailing and just operating in a very competitive marketplace. But now, you know, with the pandemic, we're under a new normal, and you have to find new ways of earning revenue and managing expenses.
It's like if they didn't have enough challenges going on, let's smack a big global one on.
Exactly.
And you know, Alan, what we found as we work with people is a lot of things about running a business are, number one, educating yourself, but number two, really trying to keep clarity of focus. And I find that the things that we've put in the presentation today, it's really about teaching you how to think. Because when you think about your business, you could run your business with emotion, and a lot of entrepreneurs like to do that, and we like that. But sometimes you have to step back and say, let's take the emotion out and strip it down and see what may be best for my business.
Some critical thinking.
Yeah, so critical thinking becomes really important.
Yeah, exactly. Well, Daniel, it's funny that you mentioned that. I actually, when you weren't looking, I inserted some slides to quiz your critical thinking.
Really?
Yes.
So you want me to go next slide?
I would, yes.
Okay,
Okay, you have some surprises coming up.
Okay.
So there's a quiz I'd like to give you for 4 questions and see how you do. Okay?
I will not look at the answers.
All right. So my first question is, how do you get a giraffe into a refrigerator?
Okay, I'm thinking origami here.
Yeah.
You fold the thing up, put it in?
No. Okay, the answer is you open the door and you put them in. And now that might seem a little too logical. If the refrigerator is big enough, you can put a giraffe in. This is just an example of how we make problems tougher than they really are. Okay, I want you to start thinking, as they say, outside the box. Okay, here's another question.
Okay, another one.
Another one. This is a good one.
Okay, let's see.
Let's see if you learned a lesson. How do you get an elephant into a refrigerator?
Well, if I'm going to learn from the last mistake, we're going to open up the door and we're going to put the refrigerator in.
Not quite.
No.
Okay, that is sort of, but you have to take the giraffe out because don't forget the giraffe was sitting in the elevator. So the giraffe. This is an example how we don't learn from our mistakes and jump to faulty conclusions.
Right.
Okay.
Did you just say that the elephant was in an elevator or a refrigerator?
Did I say that? I meant a refrigerator.
Oh, okay. Okay. All right. Just making sure we didn't. Okay.
He could have been on an elevator.
Okay.
If the elevator was big enough.
I think I've learned now.
Okay. All right. So let's see. We got 2 more questions.
I have 2 more.
Yes. Okay.
Okay. Great. Let's
Number
see.
3. There's a meeting of all the animals in the jungle. Which animal doesn't show up for the meeting?
I really don't know.
It's not the turtle.
No, I mean, would it be like a dog because it's not a jungle?
No, silly.
Okay. No.
Take a look. It's the elephant. He's still in the fridge.
Oh, the elephant's still in the fridge.
This is an example of how we tend to forget relevant facts when we're solving problems.
Got it.
All right, 4th question. The last one.
Oh, this is it. Good.
This is going to be easier, I think, for everybody except for you. Okay, you want to cross a river that's filled with alligators. How do you cross safely to the other side of the river?
okay, I'm going to put this together. We opened the door, let the thing in. We had to let the giraffe out to put the elephant in.
Right.
And then the elephant didn't go to the. So I'm going to guess it has something to do with the jungle, meaning.
You're on the right track.
You take a boat?
Close. You could actually, I believe, you could actually swim across because all the alligators are attending the jungle meeting. You were on the right track.
I knew it was something like that.
That's very good. And that's an example of how we can't seem to think outside the box.
It's important, isn't it?
So, as funny or not as you might find this test was actually given to a group of Anderson consultants a while ago. 90% of them got all the answers wrong, like you. The same test was given to a class of 6-year-old kids, of which 90% of them got at least 3 of the 4 answers correct.
Okay.
Which, the moral of the story is just because you're older doesn't make you smarter.
Got it.
That probably goes for both of us.
Got it.
So, Daniel put this slide in, and by the way, I reminded him that this is actually, I'm not kidding you, this is one of my 3 favorite movies. I love The Sixth Sense because I was lucky enough to see the movie without knowing anything about it. And it was, if you haven't seen it, it's a great movie. But I see stupid people walking around like they are smart.
But that's not you.
Yeah, no.
We're not talking about you. So now that we've taught you a little bit about critical thinking and how to think about things, we're going to get right into a couple things that we want to share with you today.
Right. And I will tell you, this is not rocket science.
No.
This is... It's logic, it's time-tested pearls of wisdom, if you will. We know after doing this for as many years as we have. I'm 64 years of age, I've been doing this for 40 years. Daniel is just turned 12, and so he's a little younger. Daniel's actually he looks very young, but he's in his 40s, and he's had 25 years almost of the same kind of experience. And so we know that we can fix a lot of the problems that you are facing and some of the silly things you've been doing by imparting timely and important information, which we're about to do.
Great.
Okay.
So here we go. So Alan, what is a typical music store's largest asset?
Inventory.
Inventory. It's the one that many owners get the most drawn into emotionally.
Yeah.
But yet it's your biggest financial investment.
It is.
I mean, it's hard to believe, but especially your salespeople, they forget that those are your hard-earned dollars sitting on the shelves.
Exactly.
And so as much as you want to be everything to everyone,
right,
sometimes it's just not possible.
No, it's hard. And what we often find with retailers who are over-inventoried, which we're probably describing 90% plus of the industry, just like you said, those are cash dollars in an illiquid form that we're desiring to turn back into a liquid form called cash plus some profit. So.
Yeah, we could talk about this topic for literally hours, but here's what we're going to do. We're going to take a couple minutes and give you the pitfalls. Here's the pitfalls we see with inventory. Number one, and the most important, is you don't monitor it.
Right.
What do we mean by that? If you're not counting your inventory, if you're not gauging your inventory to see how well it's producing, well, it can walk off. People can take it. Or you can have inventory that's not making you money. And just think about this. Your inventory is like buying stock. If you bought a stock that was losing 5% every month, would you stay or would you get out?
Right.
So I know, and we know, Alan, we're going to talk about violin dealers because many times their inventory is a little different.
Yes.
We understand that.
Yes.
But we still want to talk about it. So non-inventory is one. Being told what you need to sell. I mean, think about the Violin Society of America.
Yeah.
They could come to you and say, customers walk in and say, well, do you have ukuleles? Do you have drums? I'd really like to have a cajon to play with my violin. Great musical instruments. But is that really what you sell?
Right.
And then as we talked about the last one, no physical inventories. These are the top 3 things we see with inventory. What do you think, Alan?
I would dare say that violin retailers may have it a little bit easier than other kinds of retailers, because if you think about it, at least in my mind as a guitar player, violins, there isn't a lot of obsolescence.
Correct.
Okay, so you don't have to worry about the things that some combo MI rock shops have to worry about, like samplers, drum machines, synthesizers, those kinds of things. The technology changes rapidly, and you're sitting on an overabundance of inventory that is literally becoming obsolete. You don't have that problem. But the problem that you do have with any retailer having too much inventory is that you could be choking cash flow.
Yeah. It's an issue of cash flow.
Yes.
What's your investments? So how do we fix these things? Well, our opinion is that you fix these things in the purchasing segment.
Right.
Because again, what do you always say, Alan? Buying inventory is nothing more than an educated guess.
Yes.
You buy it at the best price you can. You try to sell it as quickly as you can as well.
Right.
So how do we get around this, Alan? This is one of your favorite things. Can you go through this one?
So a lot of retailers get led down a path of thinking that, you know, if I get certain discounts, if I get flooring, or which may not be applicable to violin dealers, but there's certain incentives that manufacturers, your suppliers, will give you to induce you to buy a lot of product. And while that's sometimes okay, it's really important to never forget, really, our opinion that there are 4 main principles of buying inventory that you should never alter, you know, or steer away from. And those 4 things are just asking yourself these simple questions. When you're looking at any product, you should be asking yourself, can I sell it? Will I make a profit on it? How quickly can I sell it? And how quickly do I have to pay for it? When you answer those 4 questions, that will guide you on whether you should buy an item and how much of an item to buy if you decide you should buy it.
Yeah, great. Like I said, and Alan, you've got resources on the NAM website
Yes.
for purchasing inventory.
Yes.
Like hours of videos, right?
Right, exactly.
So, you know, we could direct you there for other resources.
It's NAM.org.
Yeah.
Really easy.
And get you there, and you can have more resources there. That's
Exactly.
good. This second topic is also one we like to talk about a lot, because now we're talking about turns and gross profit dollars, and that gets to a concept called GMRI.
When you were at Daniel has been on the front lines of financially running a large music retailing chain before he joined us. And Daniel, how important was it that you were monitoring turns and gross profit percent? And,
Yeah, it was huge.
GMRI?
It was huge. And again,
And what did it tell you?
it tells you everything. I mean, it really tells you what makes money and what doesn't make money, and how you're doing with your investment, which is what we're concerned about here. And again, we know here. Let's get the elephant in the room. No pun from earlier intended.
Right.
But let's get it out of the way. And that is, we know you guys have high end stuff. That is, like, you have high end violins, you have high end bows, you have different things that people want, and you're going to have somebody come by sometime over the period. We get that. And you have to manage those things, and you have to look at those things, and you may have to allocate dollars from elsewhere in your store.
Right.
But in the end, you always have to have enough cash to pay your people and pay yourself.
Right.
So you have to kind of watch that, engage that. In inventory, when it's your largest investment, it's the one piece that you have besides your people, which is another important asset, to make money with.
That's right.
So we got to watch that.
There's certain metrics that we know that we live and breathe by in the management of inventory, and I'm just going to give you just a couple general overviews of what those metrics are. You really, when you buy product, you should be thinking in terms of selling it within a 30, 60, 90 to 120 day period. Now, some of you, I'm sure, can think of product that's been sitting in your store longer than that, maybe even in the years beyond just months. And while you can go a little longer than this, call it 30 to 120 day period, you really should only do that when you can assure yourself of higher profit margins. But if you're dealing with any product that has, lower profit margins, or, something, I'll give you a range of, let's say 20 to 35, 40%, somewhere in that range, you really should be moving that product every 90 days, 120 days. If you can assure yourself you can get 40 to 50% margin, maybe you can go out 6 months. But I'm telling you, if you start thinking in terms of selling it within the course of the year, you're going to, unless you're flush with cash, you're going to have some cash flow problems by products sitting around that long.
Yeah, and we know for our people watching this right now, please don't stop the video, because we understand that your business plan is a little bit different with a high-end product.
Right.
But what's not different from other businesses is cash flow concept.
That's right.
You got to have cash flow to pay the expenses.
That's right. I'll say one last little comment about this, that a lot of times dealers come up to us and say, gee, I have to carry this product. I know I won't sell it. It may take me a year to sell it. How does that fit into the metrics that you're telling me to live and die by? And so if you have some product that you just have to carry to be a real violin shop, and it's going to take you a year, I would arguably tell you to reduce your advertising budget, because really you're carrying product really for the goodwill of being seen as a true violin shop to your customers. you're kind of ignoring the return on your inventory investment.
Right.
So,
If you could do a little bit of both, I think you're going to find success with the inventory.
right,
But don't bury your head on the inventory. It's your largest asset, and it's why we wanted to lead off with it today.
right.
All right, well, with the purchase of inventory, now usually we get some debt.
Yeah.
Doesn't this say we could relabel debt and put 2020 because everybody feels like they're just sitting on a
On a time bomb.
It's a
Exactly.
weird year, isn't it?
It's been very strange.
But running a business is really, it's really about managing your debt.
Yeah.
And one of the things we say, Alan, all the time is that if somebody calls us and says, "Tell me some of the attributes of your greatest retailers," one of the top 5 items we say is most of them have little to no debt.
Right, exactly.
And as I worked with Violin stores, and I always
Yeah.
call them Violin, we should call them orchestral to be correct,
Yeah.
actually.
Mhm.
A lot of them have low levels of debt, which is great.
Which is phenomenal.
Which is great. But even when you have to take debt on, if you're going to be in the rental business, another thing that we like in
Yeah.
this industry. So if you're in the rental business, many times you have to take debt.
Right.
But what are some of the pitfalls, Alan, that comes with the debt?
Well, you know what? I'm going to tell you, I just want to say one quick little thing that you taught me, Daniel. You never know what's going to happen in any given year.
Yeah.
And just like you said, 2020 is a weird year. And when you look at it through that lens, going forward, it's going to be really important that you preserve cash flow in your business. Don't strip everything out. Keep some reserves of cash, because you just don't call it the rainy day fund.
Yeah.
With that being said, when debt is required, and we like debt, believe it or not, as long as it's managed, so you're not borrowing too much, it's not costing you too much, and it's appropriate for the levels of inventory that you have or other assets that you might be financing. What we like to say is, if you're going to borrow money, your banker should be guiding you on the correct financing vehicle to use to borrow that money for the specific asset that you're buying. Or said another way, if you're buying inventory, then the types of debt that you should be incurring to finance that inventory is either your trade debt from your vendors, or maybe short-term lines of credit where you can pull money, make a buy, sell the product, take the money plus profit, and pay off the debt. So it has this kind of effect on your line of credit.
Because you're trying to pay for it as you sell it. So
That's
it kind of
right.
holds you accountable to sell it.
Exactly.
In a period of time.
Exactly. And then there's other kinds of assets that you need more time to pay for because they won't turn to cash very quickly. We call those long-term assets. Dale.
Like your rental pool.
Your rental pool, exactly.
If you're
It
gonna
comes in
buy-
little pieces, right?
If you're going to buy a container of violins and throw them in your rental pool,
Right.
you may need help with that if cash flows a
What
problem.
do you see as the kind of loan that people are getting for their rental pools?
It really depends, and it really depends upon your rental program and your own cash needs. Some people get as little as 2 to 3 years. Other
Right.
people are stretching out 5, 6, 7 years.
Got it.
I think if you're getting like fractional strings
Right.
in that you're going to have for the next 10 years,
Yes.
you may need a 5 to 7 year loan to do that, especially if you're getting ready to beef up your pool or something like
Gotcha.
that.
Good point.
But having the right term, and many times, as simple as it sounds, bankers don't understand this because a banker, Alan, many times, as we know, they want to throw you in a line of credit.
Yeah, because they think that the rental pools are inventory.
You know why they want to throw you in a line of credit? It's a pretty easy process
Yeah.
for underwriting.
Right.
When you start getting terms of debt, they're like, well, how am I going to collateralize all these instruments and
Exactly.
stuff like that?
And what's the cash flows
Yeah.
look like? That kind of thing.
Yeah.
So,
Another pitfall, Alan, you mentioned this, a rainy day fund, no working capital.
right.
That's either because you don't have income or you have losses and and
Right.
you just don't have money there,
Right.
or if the owners are stripping all the money out,
Right.
either because they can, they want to, they
Right.
need it, whatever.
Because we know violin shop owners are buying Maseratis and Ferraris
And yachts.
And yachts.
Very
Yes, we
sophisticated.
see a lot of
Very
violin
sophisticated. We do.
guys with yachts.
But here's the big one. We like to think of, when we think of debt, we like to think about, what about missing the opportunity?
Right.
Your number one, even with inventory, your number one consideration point always has to be the opportunity cost.
Right. Exactly.
Because like, what if somebody came to you, tomorrow and said, I've got this $100,000 pile of instruments that I'll sell you for $15,000.
Right.
If you can't get $15,000, you might have just missed out on an opportunity.
That's exactly right. That's exactly right. Or the opportunity maybe even buy another violin shop.
Oh,
They're gonna-
yeah, that's a big one.
Right.
Who knows? So here's the solution to this. If you blow out excessive inventory, and again, this is kind of turning back to our first topic of inventory, it just kind of helps you cyclical. It'll create cash, which you can, what you do with that cash is up to you. You're gonna have to pay your expenses, pay your people, but then you can reduce debt. If you reduce the debt, there's a line on your profit and loss statement called interest expense.
Right.
People always sometimes say, what's the easiest way to reduce interest expense?
Reduce your debt.
Reduce your debt.
Right.
Again, this isn't rocket science, as we say. And then you can also increase profitability and cash flow. How do you increase profitability? Well, if you have cash, many times you can buy better.
Right.
And you can
Your margins get better.
margins get better. Right, and cash flow gets better.
Awesome.
So, and then we do the good cycle again. But again, too often we'll have other things that creep in, like COVID.
Right.
And then you got to deal with that and having cash flow. So being properly financed and making sure that you have a rainy day fund, we think is really important in a business.
So there's a quick point I'd like to make about this slide. The owner is wearing too many hats. A lot of business owners think they're doing themselves a major favor by not only being that person that's running the store, buying the inventory, checking in the inventory, managing the cash flow, reconciling the checking account,
Fixing the toilet.
Fixing the toilet.
Because it broke.
That's right. Because you're saying, well, I can save a lot of money on a repair guy, I can save a lot of money on a bookkeeper, I can save a lot of money on a shipping, receiving person. So that's true, and that's all awesome until it's time for you to sell the business, or God forbid you get sick and the business still needs to run. If all of those functionalities of running your business rest with the owner, that means all the goodwill, the value of your business is resting with an owner. And if that owner gets hit by a bus, your store and your family are going to be behind the eight ball, because the store may not be able to run because all the knowledge base is with the owner. And if, God forbid, you were to pass away, and we're all going that path at some point, your family is going to have to deal with, selling a store, transitioning a store, and if all the value was with the owner, well, the value died with the owner. So we're big fans of making sure that you not so much do everything in the business, but manage the business and empower others. So,
Right.
So the pitfall here is if the owner is the only one that can do the sales, repair, accounting, rentals, ordering, bill, we see this all the time, then the value is with that owner. That's not a good thing, especially when it comes time to transition.
No, especially when you look at the second one, because how often are we
Right.
hearing burnout?
Yeah,
Burnout is a real thing.
that's right.
And it's one thing if you were in a job and you just said, okay, I can't do this anymore, I'm going to switch jobs. But when you've invested all of your cash into your inventory and your people, and you get burned out, what are you going to do?
Exactly.
So it's about pacing yourself. And Alan, I would say that there's seasons where you may do a lot of these things, like say you're building the business or early on. But I think you got to think long term with this, right? That's kind of what you were saying about thinking with the end in mind. Is that you got to say at some point I can't do all of these things.
Yeah.
But it's a dangerous place to be when you start thinking that way, because it's always harder to change.
Yeah, it is. I will tell you, for the longest time I was guilty of that, but I've learned a lesson of late. Now Daniel does all my work, and will occasionally even make me a coffee. I don't think he's ever made me a coffee, but
see, I'm an employee, so I get burned out. I just quit, and he's stuck with it. So
Daniel's actually the manager. In probably most regards, I work for him. So
it's not true.
I own the joint, and he tells me what to do. I go, okay.
I don't even know where this is going, but we're going to get it back on track here. And so, obviously, and again, this is a little personal, we understand. You wearing too many hats may not be a good thing. And as Alan liked to call it when we came up with this slide, so the solutions to being cheap and stupid,
Right.
Not you, of course, we're calling somebody else stupid,
Right.
is, you have to really, make sure that you're not the jack of all trades and the master of none.
Right.
Find out what you're good at. I always work with our owners to say, what is your passion? Some people cannot sell, so they do the managing and the bookkeeping.
Right.
Other people can't stand to sit at a desk, and they're people, so they have to be out selling. Just find out what you're good at, because you can find qualified people to help you with the other areas. Here's another point. Are you working in or on your business? if you're blown out 8 to 7 every day, which I know, that's even more than 9-hour day. If you're blown out, just keeping track of all those things you're doing and you're never slowing down to work on your business, that's a mistake.
Yeah.
You've got to do that. Good business owners have to do that. Here's a simple one. If you're not an expert, hire one.
Right.
Just hire somebody.
Right.
You know, and then here's the, you know, Alan brought this up about the bus, and the key there is, you know, to delegate and manage. So again, we realize that businesses aren't always at a place where they can have these big, robust staffs to do all these things they want to do, and sometimes you have to do these things.
Right.
All those things that we're talking about. But duplicating yourself and making sure there's duplication of efforts, that really helps you in times of when there's a crisis that does happen.
Right.
I mean, think about it, Alan. We're accountants, and over the last 5 tax seasons, which is our crucial time of year, we've had 2 of our staff members have had family catastrophes.
Right.
And we literally had to tell them, go deal with your family. It is the proper thing to do.
Right.
And guess what? We made it through.
Right.
But it was because of a team effort and duplication of effort. So don't think that this can't happen to you.
That's right. Daniel has a thing called ABC, always be coaching. And my final words on that are, there's an old, kind of almost like a joke in music retailing, that a lot of music retailers will say, well, what if I train someone and spend all that time and effort and they leave? And the real question is, what if you don't train them and they stay?
It's a good thought.
Thought you'd like that.
All right. Alan, are you ready for the riveting topic? They're seeing this on the slides and they're like, oh boy.
Now's my time to go take a coffee break.
Yes, but no, it's not.
Right.
And let's say one thing right up front, Alan.
Yeah.
We know we have viewers from all around the world,
Right.
Potentially viewing this, or so our egos think.
Yeah.
But what we don't practice international law. We're familiar with it a little bit, but we don't practice outside the United States.
That's right.
We have our own myriad of problems inside of the United States with this issue, and we've heard that other countries, states, people like that do.
Right.
So our first bit of advice would be, don't bury your head in the sand about this topic wherever you are, because we're going to kind of relate it a little bit to the United States consumers and the United States business owners.
Right.
But these topics we know are all over the place, right?
Right. I will tell you, the one thing that's probably universal to everybody watching this video is that every country has its own tax enforcement agency. We have some clients that are from Japan, Canada, the UK, and so we know that there are audits of businesses to make sure they're paying their fair share of tax in those countries and probably all the other countries as well, in addition to the United States. So the simple point is just make sure that you comply with tax law. There's some additional issues of late that we've had to deal with here in the United States, ranging from labor laws to sales tax laws. Daniel's actually become like sort of our go-to guy on sales tax, and let me tell you how monumental that is. It's sales tax is governed by your states. So this dude has had to, this professional dude has had to learn or at least be able to research 50 different state laws as they relate to the collection of sales tax.
Yeah, sometimes they go to the county level.
Yes.
But we also know that sales tax, so let's talk about sales tax while you brought it down, because that's kind of our first one, is in sales tax for those that may be watching elsewhere, it's the tax that's charged usually to the consumer on the purchase of goods or a service.
Right.
So it's something that you're collecting, ideally, with a sale, and then you remit it to your government. Well, that's pretty been around in the United States for a long time. But what's got complicated now is who you're remitting the money to, what charge.
And the channels under which sales tax are now having to be charged, because as I'm sure all of you are experiencing, there's been this migration from brick and mortar to online transactions, and so that has traditionally been a lot tougher to police for the states to track online sales and make sure that sales tax has been being collected and remitted. So that's a big issue these days.
Yeah, that's a tough one. Here's another one we see. This one kind of creeps up at inopportune times for our clients. All of a sudden they get a notice, well, you're not registered to do business here.
Right.
Well, what does that mean? You know, it's like, well, they forgot to file a piece of paper early on and pay a $25 fee, whatever it was.
Right,
but
right.
being registered to do business is a big thing, especially when you start, like for people like that don't register to do business in the United States.
Yes.
The United States gets involved, and
That's right.
you know they're a little less.
There's high levels of tax withholding.
Yeah.
When you earn, when foreigners earn income here. So we have those kinds
That
of
one.
laws.
And then here's the other one, and again, we're assuming this is a problem for many other countries as well, is employment laws. Whether it's here in the United States, the hot topic lately has been independent contractor versus employee.
That's right.
But then you have, even within the employee, Alan, you have all these topics about what you can do, what you can't do, hiring practices,
Right.
firing practices.
Health insurance,
Health,
or
all these.
employment benefits, all
Yeah.
those kinds of things.
And guys, before you email us and say, oh, I need some help with that, we're not the professional. There's usually not one professional that can take care of all these things for you. These are things where you have to have multiple professionals to make sure that with all of your employment laws, that's usually an employment attorney or an HR specialist.
Yep.
That's who would look at that. Registered to do business may be a corporate attorney, and then sales tax is going to be anywhere from internal to an accountant.
Correct.
So these are dangerous pitfalls, and if you're in the United States, especially if you're starting to sell across your state lines, you've got to watch out for sales tax.
That's right. So don't be afraid to hire professionals, and if you don't know who to hire, I got asked that question once when I was doing a presentation at NAM. How do I know if I've got a good accountant or a good lawyer? And I had to think about it for a second. I think the answer is talk to your friends, talk to other business owners, find out who they use and who they like and who they trust. That's always I think that's a good way to find a true professional.
Here's the top 5 we like, Alan. We always tell any of our new clients, make sure you have a good attorney, make sure you have a good accountant. We're hoping that's one of the two of us, but you never know.
Yeah.
An insurance agent. People are like, oh, I hate insurance agents because of whatever reason. I don't hate insurance agents. You don't either.
And no, it's just that we don't understand. It's a very complex segment of business.
It is.
You ever read an insurance policy?
No. No, they're lengthy, and
Right.
but they're important because if something should happen, that's
Right.
when you need them. So you got to kind of balance that risk of not carrying insurance or different levels of insurance. So you need a good agent that you could come alongside that can guide you on that. There's got to be trust there, right?
You took the words right out of my mouth. I was going to say, what's Daniel really talking about when you pick any one of these is that you have a fair amount of trust.
Yeah, we just talked about banking and having a rainy day fund. You need a good banker and then a payroll company. Look, if you don't know who to go to for this, obviously talk to the professionals you know. You may have an accountant, you may have an attorney, you could ask for this. Obviously the VSA, the Violin Society of America, could be a resource. They may have some resources for you. If not, if you're a music merchant, that's what NAM stands for in case you didn't know, National Association of Music Merchants. When you're a member, they have resource pages for all of these different areas to help you. A new one here in the States that we have a program called SCORE. It's by the Small Business Administration, where they'll partner you with an executive that used to be in business. Many times it's a CEO or CFO, and they'll just coach you. And guess what, Alan? It's free 99.
Love that.
Nothing.
Free is great.
Free is good. You don't even get the help. So again, as you can see for us, what's most important is getting help to make sure you're compliant, and don't put your head in the sand on these issues of tax compliancy.
A lot of people, my final comment here is that a lot of people look at an attorney, an accountant, and those kinds of professionals, and they realize that they have to spend some money to hire those people. And so what I always like to say is just remember, it's really not an expense, it's an investment. You think they bought that?
Maybe.
Okay.
Alan, our last pitfall.
Yeah.
Succession planning. When do we start planning for a succession?
Well, a lot of people are thinking about it as they're taking their last breath and they're about to die.
Well, that's morbid. How about a little before that?
Yeah, exactly. It's always good to. You know what the general rule is? You start thinking about transition the day you open your business.
Yeah, but what's our number one call? Our number one call is somebody calls us and they said, "I'm had enough. I'm ready to get out of the music business."
Yes.
And guess what? They want to sell their business right then, right now.
Right. You have to plan for that.
Plan.
Yeah, because there's a time to sell. To the old buy low, sell high.
Yep.
Okay, that kind of thing. And then there's also, getting ready to sell. And then the options of transitioning a business. Are you selling to a third party? Are you giving the business to the kids? Are you selling it to the kids? Are you selling it to a key employee? There's a lot of...
We have seen
Yeah.
so many options
Yeah.
over, so many succession paths, we'll call
Right.
it, happen over the last 5 years that people say, well, what's the typical path? Take the word typical out.
There
They all
isn't
look
any.
different.
Yeah, they all
They
do.
really do. They all look different. But the biggest thing is, Alan said there, is you got to plan on it from the beginning, because here's the pitfall we see, and this is the number one: something unexpected happens.
Right.
You know, Alan, you started off morbid, but it's reality.
You know, my favorite comment is, like, whenever we do succession planning or estate planning, a client will always say, you know, if I die, and I always get a chuckle about that because I don't think it's an if. I'm pretty sure it's not an if. I think it's a when. And nobody knows when. We don't know. It's a lot of this is in God's hands. And so something unexpected happens. That's not the time to start thinking about transitioning your business.
Or when we get the calls and say something did happen, now what do I do with the business?
Right. And then you're leaving it to your family to figure it out.
Yeah,
and that's horrible. You don't want to do that to your family. They may not have the knowledge base that you had about the business, and you know, you're asking them to figure out what to do with your business at a time that they're grieving.
Yeah.
So
Alan, the second one is you missed a sweet deal. This kind of goes back to wearing too many hats.
Right.
And I got to tell you, I've been here with you about 5 years, and I had a client that called, and they asked me to do a little evaluation of their business, what I thought it was worth.
Right.
And I'm just going to use hypothetical numbers here. And I got done, and I said, okay, I think your business is worth $250,000. And the owner said, well, that's about what the person wants to offer me for. And I was like, okay, at least we're in the same ballpark. And they said to me, would you believe me if I told you that about 5 years prior to that, they were offered $1.2 million for their business? Yeah. It was literally like 5 times what they were doing it now. They missed the sweet deal.
That's right.
And they told me, and this is the way they feel, back when they were offered $1.2 million in that example, they probably thought it was worth $2 million.
Right.
And so understanding what you're worth and the value of your business, so when somebody comes in and offers you the money, you know, and you're ready to go.
Right.
You know, because if not, then again, we go back. The unexpected, leaving it to the family, it's a tough place to be.
Exactly. I laugh. We missed the sweet deal. What they missed was the sweet ignorance. The party offering 1.2 million was probably, and we've seen that.
We've seen it.
We have seen, you know, amounts paid for businesses that were paid far greater than arguably what the business was worth. That's because the buyer lacked some important knowledge about how businesses are valued, things of that nature. But
so, and Alan, again, not trying to solicit business or anything like that, but if you go back, there's resources on the NAM webpage where we've done sessions on succession planning.
This has become the new hot topic. You know why, Daniel? Us guys my age, we're baby boomers. Guess what? We're entering the phase of retirement. So all of a sudden, the last 4 or 5 years, boom, you know, inventory management which was always the hot topic, has become still important. But all of a sudden, it's been succession. How do I transition my business?
Yeah, so. And even in this pandemic, people are still trying to sell, and people are buying businesses.
That's right. So there's opportunities.
You never know
when
when the sweet deal's going to be there. Do it now.
Right.
If you're going to do an internal succession, one of your kids, a manager, start grooming them. The whole thought, like, you know, Alan said earlier, like, if I train somebody, they may leave. But what happens if you don't train them? It was a great point. The same point here is, well, if you don't start imparting your knowledge on them and showing them the financials and how to run a business, how are they going to know how to do it?
And one way that they can prove to you that they can run the business is, guess what? Let them run the business while you take a 2-week vacation and see how they do. Yeah. You know, when they're forced to do it.
Exactly. If there's no heir apparent, start planning to sell it. Selling the business. We have a good friend that does some business transactions and what they call mergers and acquisitions. And they always say, give me 2 to 3 years to get in there and really work with the business and position it. You're not doing anything wrong, or it's not like you're doing anything schemy, but it's like you're really cleaning up house.
That's right.
I mean, think about it. If you're going to put your house on the market, usually you paint, you do all this stuff. Same thing with the business.
I'm thinking of a particular client that we had that all of a sudden started entering some very profitable years. I mean, he was approaching retirement age, and he started asking us, is now a good time to sell? And I said, you know what, we can see bigger profitability coming down the road in a few years. Wait a few years. He did, and he got top dollar for that business. Yeah. So
it's amazing if you have a chance to plan it and just look and see how you're building the business. It goes back to Alan's statement. when you enter the business, if you're going to go buy one, if you're in a business, you should already have a 5 to 10 year plan and kind of know what you're worth in case that person walks in. Because, and again, we talk about tax planning. This last point here is about tax planning.
Right.
There's ways in the United States to avoid some taxes on that.
Right.
So that's something where you got to collaborate with those professionals.
Exactly.
You need your team.
Exactly.
So you got to have your team in order. So Alan, these have been 5 things that we talked about, just, we call them pitfalls.
Yes.
But I also call them areas of opportunity.
Correct.
Because it's about how you think. And even as you're finishing up this session right now, we appreciate you being with us. We hope it's been good for you. But if you just watched it and you close your computer and say, okay, now I got to go place an order, they don't understand what we got to do. We do understand, because when we're done shooting this video, we're going to go back to preparing taxes. So we get it. But if you didn't write something down, and if you don't take action, because as it says here, action changes things. Right. If you just listen to this and don't take action, nothing's going to change.
That's right. And we're not sitting here professing to have just given you all the answers to those topics, over the course of a half hour, let's just say. But it should cause you to think and to consider whether these problems are affecting you. And then there's myriad of resources out on the internet, on our website, articles that you can read more about how to resolve some of those issues and really fix those things to assure yourself a good transition, manage your inventory, have the right kind of debt, those kinds of things. So
yeah, and just again, we're not trying to solicit here, but if you want some of those resources, they are free on our website. It's www.FKCO.com.
That's right.
And under resources, you can find different presentations and different things that would be helpful to you.
Exactly.
So we hope this was helpful for you.
Yeah, we love doing this.
Yeah, when we're sorry we couldn't interact. We heard you laughing at the jokes here, and so that was good. And we look forward to talking with you next time.
Sounds great. Stay healthy. We'll see you, everybody, sometime soon. Hi everyone, I'm Alan Friedman. I'm a CPA and a partner with a firm called Freidman, Kannenberg and Co. We are a CPA firm located in the Northeast, and this is one of my favorite people in the entire world because he likes to dress like me.
There you go. My name's Jobe. I'm a music retail consulting. Been here with Alan for 13 years.
Yeah. Exactly. Today, by the way, happens to be our 35th anniversary of our firm's existence, which is amazing on so many levels. We didn't think we'd make it 3 years. Daniel actually had probably 10 or so years of experience in music retailing before he joined our firm. So he has over 20 years of combined music retailing and financial expertise, tax planning, all levels of tax compliance and accounting in the music retailing industry, which is amazing because he looks like he's 23, which means he started at the age of 8. Yeah. If my math is probably not right.
Let's hope that's correct. Yes, but you know what's great about it, Alan, is with all this experience, many times you tell clients we're not we're not lucky. Or what do you say? You say many times we're lucky.
Or I say, like we're not necessarily smart, but we are lucky because we're in that unique position where we get to see all kinds of things, mistakes, sometimes bad judgment in the running of music stores, and again, it's not that we're smart, it's that we have figured out over the years some of these crazy things that music retailers do, and we are constantly consulting to music store clients as to how to avoid those pitfalls and to do some of the best practices in music retailing.
Right, which is when we got the call and asked us to present, unfortunately we can't be there with you in person, but the message is still the same, that there's some tried and tested methods that work in this industry. Right. And we're going to share those with you today because many times people call and say, tell us what your best person does. Well, you're going to see a lot of the characteristics of what our great stores do. So as you see these things and you say, well, I can't do that, I just want to share with you, there are people out there that can.
That's right. And it's become more critical, hasn't it, these days, given what's going on. We're in the middle of a pandemic. Yeah. And so that's an entire new layer of anxiety and challenges.
Yeah, we'll talk about that. But before we talk about it, Alan, if you don't mind,
yes,
these people may not know what you very well because you're a guitar player. And we're talking to the Violin Society.
And a trombonist. Yeah. Who better to talk to a Violin Society than a guitar player and a trombonist?
At least I was in the orchestra with them. That's right.
And can read music.
So Alan had a band. Alan, you want to tell them the name of your band?
I never know what Daniel's going to do in his PowerPoint presentations. This is a band of all accountants called the Accounting Crows.
Right?
Mm-hmm.
And they're still together. A lot of them still together.
Yes, we're a little older now. My Jimi Hendrix has widened a little bit.
Just a little bit. But here's when you were...
Yes, when I was part of the British invasion.
Yes.
I was the only American in the British invasion.
There you go. So you did a little bit of that.
It's a fun band.
And then we had this band when...
Yes, that was my disco years.
Yeah, yeah.
Disco here, disco there.
And you were the village
idiot.
Okay, right. But, with all of this talk about the election, there's something else that people don't know about you, Alan.
Yes, I wanted to, I couldn't make it a musician, so I think I'm going to pursue a career in politics.
So there you go. It's an early announcement, but... enough of that. We always like to have fun. You guys may have seen us present before, but we always like to have fun. But we're going to get right to it because this is why you're here, the best practices. So we're going to share some best practices starting right now. Here we go. Topic number one is going to come as no surprise from a couple accountants. We like the financial data. We know how much you guys probably like the strings, the instruments, and everything that goes with that. And we love that too, don't get us wrong. But when you're calling a professional, you want to know, how are we doing? What's our financial data look like? And the scary part is this, guys, is that many times people call and will say, hey, no problem, send us a balance sheet or income statement. They're like, I don't have one of those, or I'll have to talk to my accountant. And our opinion is, in this day and age of technology, that's just too late. Right. Everything's laying in front of you where that you should be able to keep track of everything on a real-time basis to be able to make some decisions. Yep. It's not only critical for us as an advisor, but Alan, how do you make a decision on how to run your business on a daily basis?
Exactly. The funny thing is, if there was something ailing you, physically ailing you, you would go to a doctor. What they're going to run diagnostic tests. They're going to do some X-rays or a CAT scan. That's data. That's their critical data to assessing your health. This is no different. The financial data that we rely on to assess your financial health is a financial statement comprised of predominantly a balance sheet and an income statement. The two most important documents, in our opinion, to assess not only whether you're making money or not, but your liquidity, how your inventory is doing, how's your inventory productivity, are you getting the return on your inventory investment appropriately, how's cash flow, things of that nature.
Yeah, and it's right here. And look at this, I built you a slide for this, Alan.
I love this.
Let's talk about it just for a second. I'll take the balance sheet, you'll take the P&L?
Perfect.
So on a balance sheet, it's a picture of what you own, that's your assets, and who you owe are your liabilities on a day and time. So on any one day, it tells you, what do I own? What are some of the things I own? Well, I have a cash account, have money in it. I may have people that owe me money, that's receivables. Inventory, you have assets, and maybe you have a rental pool of orchestral instruments, maybe some band instruments. That's what you own. So that tells you what do you have that's worth something. And it's what you do with that is what really is how your business performs. What's the balance, or the bottom of the balance sheet? My liabilities. Who do I owe? Trade vendors, banks, accrued taxes for your sales tax, lines of credit, long-term debt. So a balance sheet, you don't have to really try to geek out on this and be like a balance sheet expert, but there should be some of these key terms, as Alan was pointing out a while ago, that you should know how to read, and that information is on the balance sheet. And then the balance sheet interfaces with the income statement, Alan.
Exactly. So on the income statement, as the name suggests, we list out all of your revenues, the money you made over a period of time, and we list out all the different expenses that you incurred over that same period of time. The difference between the two is hopefully profit. So here we have revenues in this particular company is $3.5 million, direct costs. So we actually like to break out a lot of these expenses in a manner that shows you if you're making money selling product, renting product, delivering equipment, lessons, repairs, rentals, all those different activities. And then we like to show the overhead of the business, and then things that are sort of not as part of the ordinary operations, but things that do, like interest income, or if you have a loss on the disposition of a piece of property. So, but all those revenues and expenses hit the bottom line, which shows you whether you're making money or not, and it gets added to the equity section. And Daniel, maybe you can have a final comment about the difference between assets and liabilities and what that shows.
Yeah, we can't see it down below, but that's going to be the equity section. Right. So right here we had $2 million of assets, And you can add these two numbers up here quickly to see we've got $1,450,000 of liabilities. Is that math right?
That is right.
And you know what 1 + 1 is equal to, right?
Anything you want it to be.
Anything you want it to be in accounting, that's right. But the difference between those two are what is going to be the equity section.
Right.
And Alan, what I would tell them, and tell me if you agree, that this may be a little foreign to you guys watching, but priority number one is watching your income statement and
Yes.
getting that net income to be exactly what it says, net income,
Right.
not a net loss.
Exactly.
Once you've mastered that, then you need to move over to the balance sheet.
That's
But
right.
you really got to start somewhere with that. And these statements might be, if you're not sure about these statements, talk to your accountant.
Right.
They can help you understand them. There's all kinds of resources. There's resources on the NAM website
Yeah.
where you've done videos about how to read financial statements and stuff like that. So let me end this section with this, Alan. In my opinion, a best practice would be not only using those documents, but looking at them. How often do you think we should look at them? I like to say on a monthly basis.
I would agree with that.
Too many things change week to week, day to day.
Day, right, exactly.
But you can't really go much more than a month or two because things are seasonal with
Right.
quarters.
So would you agree that a December year-end music retailer should probably be looking at how they did for the year in late January, early February?
Yeah,
How do you feel about doing it in like October?
I feel like then we're just preparing a historical data report.
Right, exactly.
We can't give
And
information.
it's not useful,
Right.
or it loses its usefulness because
Right.
you're already 9 months into a new year.
Right. But let me put this list up here so you can see them. Here's some of our favorite reports, and many times your software systems will do this, but you'll just have to check. Obviously, we just went over the balance sheet and profit and loss statement. By the way, profit and loss is sometimes also called an income statement. Sometimes it's called, Alan said, the bottom line.
Right.
Inventory productivity. Again, we have tons of resources for people if you're not sure about how your inventory is producing for you. Because remember, your inventory is your liquid dollars that are now hung up
Right.
in an asset, and it's what you make with those is how you get your return on those.
Exactly.
That's what the GMRI stands for, gross margin return on investment,
Right.
which we're talking about inventory. Inventory aging report, it's a little bit different because this tells you what's been around for a long time,
Right.
arguably not making money. Receivables, contract aging, if you're not looking at your rentals and seeing how often people are paying you, that's could be missing some opportunity in accounts payable. But all of these point back to your balance sheet and lowering, like on your inventory and your receivables and your aging and your payable. It's running your balance sheet. So you may not be an expert in your balance sheet, but if you can work on coming up with these things, that's the steps, the building
Right.
blocks to get you where you're doing your balance
One
sheet.
comment that I do want to make, and you may not understand this today, and you can talk to your accountants about this or read any of the articles that Daniel has alluded to, but if to assure ourselves that your P&L, your income statement is correct, we actually make sure to prove that your balance sheet is correct. It's a lot easier to determine on a day and time, like the last day of the year, how much cash you have in inventory. It's just you reconcile your cash account, your bank statements, you count your inventory, you get a list of all your trade payables, and if we can assure ourselves that we know what the assets and liabilities of the business are, then we have identified exactly where the equity of the business is on that day and time. That means that the P&L shows us how we got there. Essentially,
Yeah.
that's what it means. So they're very interrelated, and together they tell you an awful lot about your business. So
Right.
They're both critical.
Yeah.
Everybody, music retailers, like many business owners, just not confined to retailers, they're all about the P&L. Did I make money? How big are my sales and stuff like that? And we're not downplaying that. That's very important. But you want to make sure that it's an accurate
Right.
P&L, and that how you assure your accuracy is by making sure you look at your balance sheet.
All right, enough geeking out on that topic, right, Alan?
Exactly.
Financial statements and looking at things on a regular time. Include your managers in on this meeting, but make time every month to work on your business.
Got it. You know what, Daniel? I'm old enough to remember when businesses used to account for their activity using a pen and a piece of paper, ledger paper, like sort of the Bob Cratchit kind of thing.
Was that called an abacus?
Yeah, I think so. It was before that even.
Oh, before that, okay.
Yeah, exactly. And one write sheets. I've seen all kinds of crazy things, but with the advent of computers, things actually got a little easier. But what was funny is I can bring it forward a few years and say the crazy thing that we really shouldn't ever see these days is the use of multiple software packages from an accounting standpoint. Like in the earlier days, and I'm talking about 10, 15 years ago, you'd see some clients using QuickBooks for general ledger, or using maybe an industry-specific package like AIM SI is one in our industry, or RAIN or some of the other ones, and or they use Excel spreadsheets to do other kinds of things. That's really kind of nonsensical, because there's a duplication of effort, and really you should be using one integrated accounting software package, because if you got all the different components of receivables and payables and ledger and inventory and purchase orders and things talking to one another, it should be as easy as pressing a button and you can get some of the key reports that you were talking about.
Exactly. And Alan, people always call us and they'll say, what software should I use? We put some names up here that are in our industry. Retail Up is in our industry. Tyler, I'm not sure they're still actively looking.
Right.
We have a couple clients using Tyler. RAIN, and this is AIM by Tri-Technical System. Those programs, they work. Are they perfect? No, but we have software for our business. Is our software perfect, Alan?
No.
But you learn to get along with it. And what we say to our clients, anybody, they say, well, do I have to use QuickBooks to become a client of yours? The answer is no. Right. But we want you to use what you're comfortable with that can produce the kind of reports that you need to make decisions with your business. Right. I have a couple people using Excel. And this is just a small sampling, but we have clients that are using Excel. But if you're not using anything, or you're like using some of QuickBooks and some of Excel and some of RAIN or AIM or Retail Up to use your business, you should probably look at trying to push things together. Now, Alan, I'll tell you, just so they know, RAIN and Retail Up, they do interface with QuickBooks for their accounting system. So you might have to have more than one system, but ideally you press a button and it comes through.
Right.
Tyler and AIM are a full encompassing program.
Right.
But if you don't know what to do, or you don't have software, you need to get out and look. Here's some suggestions that we would say to look for based upon kind of best practices. One is look for the mobility of the point of sale system, or better yet, that it's in cloud. If you can do it from an iPad, I mean, you guys know the speed of everything is moving up. So you got to be mobile and you got to have good access. Online integration. Again, you don't have to be a huge online seller to do this, but you just want to make it easy to maybe sell product, and better yet, a lot of people have good customer access. They can check on their rental account, or they can check on a repair or something like that. So there's ways like that. Customer management, being able to track a lead, to say, what if somebody's interested in a very high-end particular violin? Wouldn't you want to have a note of that in case that said high-end violin comes back? I mean, it makes sense, right?
Right.
I don't know.
No,
I'm just a trombone player. I only have one trombone, so I don't know. Rental customers.
That makes no sense to me.
Exactly. Tracking all the rental customers, tracking the payments, the delinquencies, where are they? Inventory management, we just talked about. And then a financial integration that Alan was talked about a while ago, to make sure that you could produce the profit and loss and balance sheet. These are just things to look for, and what you have to do is you have to treat this like an investment in your business, and you have to find something that you're comfortable with that'll work.
One of the things that we've seen in our own business is that the hardware costs that we used to shell out tens of thousands of dollars for every time there was updates, that's sort of gone by the wayside. We don't have internal servers anymore, so we've been able to have great savings in hardware. The money's been redeployed in a different way, though. We are now in the cloud, where we happen to be using Amazon Web Services, so that gives us the ability to, and by the way, with the pandemic, we've had to rethink about how we can operate remotely. Some of us had to work from home, so we needed a solution where we could in fact do that, where if we had power loss or things of that nature. And so a lot of these cloud-based accounting software solutions are really the way to go, because while you're still planning, many of you are still planning on, and hopefully will still be able to conduct business from your brick and mortar sites, there's going to be times when you're up late at night, early in the morning, you're at home, you need to access financial data, you want the ability to go online and grab that information and know that it's secure and know it's backed up.
Yeah,
so
it's right. And now
the technology exists.
The technology exists, and like what we said earlier, is not one system is going to be 100% perfect.
Right.
We get a lot of calls where people are like, well, it just doesn't do this or doesn't do that, and you've got to pick and choose.
Right.
You're looking for the solution that's going to get maybe you 95% of the way there, But most of this comes down to you taking the time to find a product that'll work for you in building processes.
Right.
Because here's the things that we see that we don't like. The double entry, even if you do everything one way in store and then send your bank statements to your accountant, you realize that's double entry.
Right.
The accountant's doing the duplicate work. And so doing that, you get errors, it's labor intensive, it's costly. And then you get into these points, you get an inconsistency. Again, when people call and they say, can you tell me what's going on? And they don't have an inventory record. We can't look at their inventory and see how they're doing. And then the worst part is that, you just can't be that agile with financial decisions.
Right.
And again, it does come back to our profession, but this is like a basic building block of having a music store or any business. Like you said, Alan, you have to have systems that can track the data and produce the reports you need.
Right, exactly.
Because you used the example of a doctor a while ago. Those balance sheet and profit and loss statements, that is the X-ray.
Yes.
That's what we're looking for.
It's funny, like you mentioned that too, like we see a lot of medical practices are now able to look at online X-rays and things like that. And and I'll leave on this note, the one organization that's put some time and effort into realizing that there's a lot of double entry in their systems and now have been able to get around that is the Internal Revenue Service. By having tax returns e-filed, now prevents them from having to get paper copies of returns and rekeying in all the same data that we did in the preparation of returns. So e-filing is not only great for the Internal Revenue Service, it's great for Americans because you theoretically get your refunds quicker. So they figured that out some time ago that would save a lot of labor.
Yeah. It's important. So spend some time, find something that works for you, and having good data management systems are very important.
This probably won't come as a shocker to you, but we are big fans of business advisory teams. The old joke is that accounting expenses are really not an expense, it's an investment. I don't know if you've ever heard that one. But in some regards, it really is. We like to think of the advice that we render our clients as being able to not only guide them and keep them compliant with tax rules and accounting rules and things of that nature, but also to assist them in saving money. If we can help clients increase their selling margins or help clients minimize tax, those kinds of things, that's where you get the cost-benefit relationship where if you've got a good business advisory team, the money you spend on that team will hopefully pay off in spades, so to speak.
So Alan, it's interesting you say that because I feel the same way, and not just because of the profession we work in, but why do so many people look at business advisory? We might as well be putting dollar signs up there right now,
exactly.
Right? But what happens is that a business advisory team isn't popular or something that somebody needs or thinks they need until they need them.
That's right.
And then the problem with that is sometimes it can be too late,
Exactly.
right? Because you've got to have people, it's not something that you just say, hey, you're my advisor and I'm ready to go and you can fix the situation, because you get into issues of trust and working together.
Think about, why people don't like spending money on business advisors? Okay, let's talk about just a couple of them. You're spending money on a lawyer. Either you're spending money for something that you're hoping doesn't happen,
right?
Or when it does happen, like a lawsuit, it's all negative energy. You're just spending money. Think about an accountant. While we can make the argument that you're paying for valuable advice that'll save you money, a lot of people say, well, I need an accountant to do my tax return. I hate paying taxes. And so they just see it as an extension of the government. Right. And then one of the things I guess even I with insurance agents, who can understand an insurance policy? So you have an insurance guy or gal assisting you on something that you really don't have any understanding, and I don't have any understanding. So it comes down to blind faith and trust. You're spending dollars on something that you're just hoping will pay off in the event something bad happens.
Right. It is. It's almost like an insurance policy itself.
It is.
But what's interesting is when we look at some of our more successful businesses, most of them have an advisory team.
Right.
And let's look at the advisory team, because I think there's two types of advisory teams, Alan. There's what's internal. And internal, let's say you're the owner, you've got maybe multiple owners, business owners.
Right.
But maybe you have a management team. You don't have to have an official management team, but maybe it's a manager or a person that runs each of your departments, somebody that you get together with and put your heads together and try to figure out what works for you.
Right.
Because remember, if you take your management team out and you just run the business you want to, with your mind and your thoughts, it's going to be your business, and that may be good enough. But sometimes there's power in numbers.
Love it.
Yeah. Because you can't remember there was we talked in that other session that we did about you can't be the guy that does everything.
Right.
You can't be the man of all the hats that wears all the hats in the bit.
And you know what's funny in our business? Like Daniel and I are about 20 years apart. And like you get to my age, I'm 64, and it's like you start talking about, these millennials, they don't know what hard work is, and like all this something. But you know what? When you start talking to people that are a generation away or 2 generations away, all of a sudden they're seeing the world a little differently. They have some different thoughts, and they're probably more in tune to the world changing than us dinosaurs are. So don't ever poo-poo someone at even young age. A lot of people have great thoughts, great ideas and visions, and can bring that stuff to the table. I love the internal management team as an advisor to your business.
Right.
It's great.
Well, and sometimes that you don't know your employees have that ability until you ask.
Right.
You have to open up to them.
Right.
More about that in a little bit.
Yeah.
And how about an external team? Alan, these are the people you were talking about. An accountant. Alan mentioned accountant, an attorney, an insurance agent. And again, why an insurance agent is because they're going to help you. You need to, in my opinion, you disclose as much to them about your business as possible so they can help you get the right policy. So if something happens of theft, a flood, a fire, you're not worried about it. You just turn to them and say, okay, let's make this happen.
Yeah.
Banker. Alan, why do they need a banker?
Unless you're flush with cash, not a lot of us are in that position unless you've been around a long time, and even then it doesn't guarantee you that you are. Often if you're in a business that's growing, you need to grow that business by borrowing money. A rental pool is a perfect example where you can make an investment into your stringed instruments, put them out on rent. You'll get that investment back in little dribs and drabs of rental income over a period of time, but you got to pay for the instruments up front. Usually you have to get loans to do that. And what's funny is the interrelationship among all these people, because the banker, in order to help you with these loans, is relying on the financial information coming from your accountant. The attorney, when they're crafting contracts with consultants or with contract labor or other kinds of their lease agreements, so a lot of times they need to know the tax effect of those agreements. So they're constantly talking to the accountant. Same thing with your financial advisors. They want to know what tax bracket you might be in so they can help establish a good financial plan for you.
And we've seen that financial advisor pop up even more prevalent in the last 5 years because of people are looking to succession plan their business
transition their business.
And we have to look and see, well, how much money do you need? The first question we ask is, well, how much money do you need? And they go, I don't know, you're supposed to know that. And it's like, well, that's what we do.
Us baby boomers are getting tired of working.
Yeah, that's
and
right.
I love during the estate planning process when a client says, now, if I die, and I always find that funny because I don't think it's an if. Pretty sure it's not. It's kind of a when.
So here's just a couple tips on how you assemble this dream team, and it's your management team. Again, we'll talk about the internal piece of it here in just a second, but as far as your external dream team, you may have to ask other business owners, hey, who do you use for insurance? Ask your accountant, do you know a good attorney? Do you know a good agent? You could find people by just like kind of networking around. But treat it like any other relationship.
That's right.
I tell people, well, Alan, when they're going to select a bank, go interview the bank. If you don't get along with the loan officer, how do you think you're going to get approved when that loan officer goes and presents your case to the loan committee?
That's right.
You have to have good relationships.
There's got to be synergy.
Yeah, there does. Build the relationships as soon as possible. Do you know why I put that on there, Alan?
Why?
Because the time that you need to have these advisors is when you don't need the advisors.
Exactly. Like a banker.
Yeah. When you are flush with cash and you're thinking, well, I might want to do something, well, go get that relationship with the banker.
Yeah.
That's a good time to start. And don't forget, you can check with your local small business administration. There's offices in most of the big cities, and they have something called a SCORE advisor program. This is you just have to look it up. It's a great little plan where you get paired up with people that used to be business people, but they're retired and they're giving back to the community.
Exactly.
It's really a great plan to have. And then don't be afraid with your dream team. You got to ask questions. Listen to their guidance. Listen to their guidance, right, Alan?
I love that.
Yeah, I know. But that's how you build trust. Listen, we always tell clients, our job is to present you with options, talk about the pros and cons of each option, and then let you make a decision. When you make a decision as a client of ours, we're never going to say, well, I told you so, I didn't think you should do that, because that's not our role.
Right.
Our role is try to give them the advice and then support the most we can. So if you can build that trust where you can have that kind of relationship, that's really how you can utilize your advisors to really run with your business.
Daniel, I love your very first two, because a lot of time, look, there's good accountants and there's bad accountants. There's good lawyers, good and bad lawyers. The guy, what they call the guy who graduates last from med school? Doctor. Anyway, so, so you don't always know what you're getting. That's why it's important to ask other people in the industry, who they may recommend. But it is equally important to interview and check references, because just because someone says they're good doesn't mean that they necessarily are. But so I love that you have those two. They're kind of opposite, but they're interrelated.
Yeah.
Really good point. So
assemble your team. If you do nothing else, get some people in going, and so that way you'll have those advisors when you need them most.
Exactly. Daniel, I used to always think that for a music retailer, their most important asset is inventory.
Yes.
No. No, okay, it's not. I think you are right. It's not inventory.
Yeah, I know.
You can replace inventory, right?
Yeah, and inventory is basically something that someone is looking for.
Right.
But face it, Alan, if you have good inventory and you don't have a good store, you don't have, or whether you're selling it online, you can't present it online.
Right.
You don't have somebody to help service that customer.
Right.
I mean, everything dealing with that inventory, which is very important, by the way, is your people.
Right.
And I think too often, people are what gets overlooked, because your investment in them is basically paying them for what they do and the time they work.
Right.
Versus investing in inventory, it's like that's an investment. And you know what's problem, Alan? If we're just being honest, many times we like to be honest, right? Yeah. This same number one asset can be your number one pain in the butt.
Mm-hmm.
Face it, right?
Yes.
Personnel issues are one of the things, because it's just people are people.
Right.
And your ability to manage and relate with your number one asset is really what makes the difference in a business.
Yeah.
Because I can tell you, again, I'm just thinking about characteristics of some of our very strong, and I would define strong by having a great business with a great customer base, very equitable, not leveraged, going back to those prior things we mentioned. And behind all of those things are usually good people and good processes. Right. And that's really what you need. You have to have good people.
Yeah.
So what we'd like to just remind you of, and this is a little beyond our normal accounting scope, but this is more what we see, is that when you deal with your people, and by the way, this is the stuff we deal with here, because we have people here. That's how we get all the work done, because everybody knows Alan and I don't do it. ABC can be whatever you want it to be, literally in these days, but we say always be coaching. Because yes, you're going to get disappointed. Yes, a person, you just showed them that and they're going to do it wrong. But it's about patience and management skills on your side, but also keeping in mind you got to be coaching. Because again, you can't do everything.
Right.
You want to do everything. There's things that you need to do, but you can't do everything.
Right.
Right?
The best businesses are the ones that are not completely reliant on just the owner.
Right.
It's really that you have a team that's in place that's able to run in the event the owner gets taken out for a period of time.
Right.
Illness, hit by a bus or something.
And think about
like
us here. We sell ourselves as an FKCO team approach.
Right.
Because we know that if something happened to me, we don't want our clients to be left hanging saying what happens. So they know that Alan's here, and we have other people in our office that can help with them. So it's very much a team approach. Always be coaching. That's the way you're going to get them better. A big mantra of mine is inspect what you expect. And the key to doing that is you have to set targets. It doesn't matter what you're doing, whether it's targets for how much to sell or how many items to sell, or I need you to sell this piece this week for whatever reason, whatever it may be, you have to have a target to let somebody know. Because it doesn't matter how much you like music and how much you're passionate about music. There's still some salespeople that would rather sit over there and play the instruments and have a jam session and sell it. Right. I mean, that's just a fact, right? So we just got to get over that and say, no, this is what we have to do. We have to inspect what we expect. Create transparent compensation plans. Now is where we kind of get into where the meat of creating that relationship. And I'll tell you this, if your compensation plan is not getting results, then you really need to open that can back up and find out why it's not getting results.
Right.
Many times it's too complex, it's outdated.
Right.
A salesperson's like, yeah, I don't even know how they figure it, but that person in the back office does it.
Yeah.
Look, if they can run a report and take a calculator and figure their commission, don't you think that would be a little more of a incentive to go sell stuff?
Right.
You know, it's got to be transparent. And this is a big one to me. Know what motivates each person. Money is a motivator, but it's not the only motivator. Sometimes people just want to feel good about what they're doing. We've seen in this pandemic, I can't tell you how many times we've seen, and I've heard from music retailers that, oh yeah, I've got 3 employees, I got 2 employees that aren't taking any pay right now because they're really set and they just like working here. I mean, doesn't that give you a picture of our industry right there?
Totally.
It's a passion thing, but if you went to that same person and said, if you sell more, I'll give you $10,000, they may go, I don't need $10,000.
Right.
You know, it's really a very, it's a very kind of it's an individualized thing.
Yeah.
You can't just say money motivates all my team.
Totally. Daniel, you know that bonus you're getting at the end of the year?
Yes.
Don't worry about that, but you're doing a great job.
Okay, thank you. I feel so much better than that. Let me give you my wife's number so you can talk about the funding.
Got it.
But it sounds, again, this sounds silly about this being your number one asset, but if you're not doing these things, we're going to put up another slide that's going to show you kind of the downside of not doing this.
I want to give Daniel credit for the ABC because he said that to us a few years ago. And it made us always now, whenever we're not getting the results out of our staff that we think we should, the first people that we look at are ourselves. Are we doing enough to basically coach everybody, to show them the procedures of how we lay things down, or just whatever it is to achieve the goal set that we have laid out. So always be coaching has become a mantra that Daniel came up with, and I love it. I really do.
Yeah.
Kudos to you.
Well, no, thank you. I probably heard it somewhere. You know, you hear
No,
ABC,
that's good. Love
always
it.
be chewing, you know.
Right. Well, that would be mine.
Yeah, there you go. So Alan, tell them about this. What if...
Yeah, there's the old joke in our industry, what if I train someone and they leave? And then the answer is, well, what if you don't train them and they stay? That's a problem. So, the point of this is that you don't want to ignore your staff. You always want to be focused, just like I said, on the coaching end. If you don't create good morale in your organization, some bad things will happen. They won't provide good service. I'll get back to that second one in a second. They'll work for your competitor. You feel like you're being held hostage in your own house. So a lot of bad things can happen. One of the things that we see often, more often than we like to see in music retailing, is that second thing. They're unhappy. They find other ways of getting paid. Do you know what I'm talking about? Yeah, they will start stealing. And stealing doesn't always have to be they're stealing inventory. It can actually be stealing time, where they're getting paid for time not really worked, where they're on their phone, where they're engaging in social media with their friends when they should be working. There's all kinds of things that happen if you don't take care of your people and you ignore them. They're going to become disgruntled, and during that disgruntled period, they will resort to things that could be damaging to your business. So you always want to be aware of that, and you always want to be challenging them to be better selves. And
this isn't the fun side to talk about of this topic,
but it's reality.
But it's reality, and we've seen on this number 2 item. We just had a client not too long ago that found a person that stole over $50,000 worth of inventory over a 1-year period. $50,000. Might as well be cash.
Yeah, exactly.
And and when you find out, you feel betrayed, you feel like there wasn't trust, but there are signs there. Like if you're feeling like you're being held hostage, there's probably a sign that something else is going around.
That's right.
So think back about the slide prior to this and all the things that you can do proactively to treat your number one asset like they're number one, help them feel that they're number one, and then let's hope they just drive your business to a level that you're like, wow, I couldn't do this on my own, because that's why you hire them.
Right. And reward them, and definitely reward them.
Yeah, so give me my bonus.
It's coming, I promise you.
Okay, thank you.
I didn't say which year. Okay.
Alan, our last part of the day. When you think about best practices, and again, I keep saying, we get calls all the time. What are your best people doing? And not just what are they doing on their daily basis, but what's the characteristics of their store? we like to see a bunch of different things. We see the owners being involved, and we
Right.
see good financial data and good people and processes.
Managing debt.
Yeah, exactly.
Managing
All of those things
expenses,
we've talked about. But really, what we see is some of our more, I would say, stable businesses,
Mhm, mhm.
because they've been built over a period of time, is they have very diverse revenue streams.
Right.
Meaning, and again, pictures worth 1,000 words. Their eggs are in multiple baskets, not
Right.
one basket.
Love it.
And that looks different for everybody. It's like, no, I mean, you shouldn't be a music store and then maybe open up a little custard store on the inside of your
Right,
music
right.
store. We're not talking about that kind of diversification.
Unless the custard's good.
If it's good. But there's a lot of times where our music stores do buy the real estate they're in,
Yes.
so that diversifies a revenue
Right,
stream
right,
for
right.
the owner. But now let's just dial into your business.
Yeah.
What about within your business? Think about this today. What if the product, if you put if you just said, I'm going to identify my main product or service. Now think to yourself, what if that goes away? What does that look like for your store?
Right.
If you say, we're in trouble, maybe you need to
Right,
diversify.
Right.
And you know, Alan, if a picture's worth 1,000 words of what's going on now, you know what that is?
I do. That's COVID-19.
And what has that taught us?
Yeah, that is. You can't count on anything. What you can count on is that something's going to happen that you can't count on.
Yeah.
This has been very scary for us as a nation. It's been scary for us business owners. It's been scary for us business advisors. It's been scary for bankers. It's been scary for employers. It's been scary for employees.
So
All
who
this-
has it not been scary for?
The wine salesman. The guy selling liquor. That guy is not worried.
Yeah.
I actually have one. A very good friend of mine, happens to be a great singer, is a wine rep for Bogle Vineyards, and his business is way up.
Wow.
So, like with every crisis, somebody's going to do well, but he's in the minority. Pretty much our nation is going through a real tough time dealing with this, and it's scary because it's not only business, it's our health too.
Right.
So all kinds of anxiety happens, but you have to prepare for the unexpected. And I love the fact that you're bringing up diversify your revenues as a way of doing this, because that's what stockbrokers do. Do you know that?
Absolutely.
They don't say put all your money in bonds, put all your money in growth capital stocks. You're diversified in many different kinds of stocks, bonds, cash, mutual funds, all those things, so that because in any one given year, something's going to do well and something isn't going to do well, and we don't know what it's going to be. So Daniel's going to talk a little bit about these typical, if you want to call it typical, ways that music retailers diversify their revenue.
Well, yeah, and most of them you probably know about: sales, rentals, repairs, and lessons. But if you just said, I'm only doing sales, well, that could be fine for now, but what happens if something else happens? Because a lot of our music stores that have done well traditionally over the years and appear to be weathering this COVID storm pretty well have components of the first four. And you may say, yeah, right, how are people doing lessons? I can tell you we have clients that they lost maybe 5 to 10% of their students by taking everybody online. So they were able to get their teachers bought in and they got their people bought in, but that didn't happen because of something over one day. That's something they've been building for a long time.
Exactly.
Because we have other music stores that are like, I'm teaching 5% of the lessons I used to teach. That doesn't mean one's better than the other.
Right.
It just means their revenue stream and their business plans were built in a little different way.
Right.
And now, Alan, you know what's crazy is people are now going in. You notice how I put other services? Yeah, start dreaming. What's
Right.
another service? I mean, we were talking about it, just thinking about it before we shot this video for a violin store. What about appraisals? Should you get, what about doing valuations? What about doing storage? Some people do storage, like a lot of our piano dealers do storage
Exactly.
in this time. And what about, I mean, obviously you're probably doing consignments, but
Right.
what are other services that you could be offering that are going to help you weather whatever the next thing looks like? Do you
exactly.
know what the next thing is going to be?
I honestly don't.
Yeah.
Maybe new liquor stores.
Yes,
I think
exactly.
that's sort of, you know what? What's funny, kinda, is like when my kids are in their 30s, used to tell me, Dad, like all me and my buddies, we like buying online, and we like being able to in the middle of the night, sit in our pajamas on our laptop and buy stuff. We don't feel the need to go to the malls and the other places where you and Mom like to shop. Some retailers heeded that kind of forewarning, if you will, or change in the model of how product is sold. That's not to say that you can't make it as a brick and mortar store, but I dare say that these days you really have to be, however you reach your customers is what you should be doing, and a lot of customers are being reached and got their dollars have been gotten through online sales. So even when you look at diversifying, even within just the topic of sales, we have brick and mortar and we have online dealers.
Sure.
So again, this has taught us a lesson. We've always got to sort of be thinking outside the box and finding new ways of
creating new ways to do things is an important thing to look at, because it's really the vision planning. What you've done in the past is we're telling our clients.
Right.
You can rely on the past for some things, but I don't think you can rest on the past to bring you back.
That's right. That's right.
And so, Alan, as we end this time, it's been a pleasure to be with you guys today. Again, we're sorry we can't be there in person, because Alan has even worse jokes to tell in person when we're together. But we did do another session for the group.
Yes, we
did.
It's
on the things not to do.
That's right.
So if you want to check that out, I'd encourage you to check that out. But we want to leave you with this thought. Anytime we give presentations and when we talk to our clients, we like to say at the end, so what are you going to do today? Because it really comes down to an action plan. Because if you just invested the 30 minutes to watch this video, and maybe you made some notes, but if you just throw them in the drawer and you go back to dealing with emails and everything else that's important, don't get us wrong, but then you don't make action. So you're not going to have success unless you set goals and plan for success.
Right.
So you really have to break down your business and say, we have to do something, because resting on what's always worked may not work as we move forward.
That's right. And don't be misled by sometimes the simplicity of the things that we say, because we are trying to deliver all this information in a simple way that's easy to understand. And it always amazes me, like we even talk about inventory management, some of the principles of managing inventory are very simple, but yet it amazes us like how often they're ignored. And so there are little tidbits of pearls of wisdom throughout this presentation of things that we said that you should take literally and really, embrace and put in, implement into your business. Some of this, again, may seem very simple, but it's not that hard. You just need to implement it in your business. And by following these best practices, we know your cash flow will improve. We know your profitability will improve, and you'll live to see another day of the music retailing business. So that's ultimately what we want. Because if we keep you in business, guess what? We stay in business.
There you go. So long for now. Thanks again for joining us, and we look forward to maybe meeting with you soon.
Sounds great.